Hello, everybody. It is Mike Guerrieri with Health Markets here to update you and bring you up to speed as to what is happening in the health insurance industry for 2023. If you're watching this, you are an OPERS retiree, or hopefully you're an OPERS retiree, because this video is intended specifically for those people who have the opportunity to get their insurance through the OPERS retirement system and are pre-Medicare. If you are under the age of 65 and you are an OPERS retiree, this video is for you for 2023. We're going to take about the next 5 to 7 minutes, give you an education as to what is happening in the industry, reminders of what you should be doing and how to shop for plans, and then from there, leave you with some important nuggets of wisdom. So let's go ahead and start by sharing my screen, and that will allow us to stay on task. So again, this is your 2023 pre-Medicare OPERS retirees best practices. So let's start off with stipends and subsidies, because you've got the option to get one, but you only have the option to get one. All of you will be getting a stipend if you so choose. What you need to do, though, is you need to make sure that the stipend is what's best for you, because you may also have the opportunity to get a subsidy. And I say may, because your subsidy is going to be based on your income, while your stipend is going to be based on how long you worked for the state. Now, like that first bullet point says, you can only have one. And the one you had last year may not be the one that you want this year. You can flip-flop every single year, no problem. So you should, every single year, do a comparison, see what your stipend is going to be through the state, through VIA benefits, and then compare it to what your subsidy might be through healthcare.gov. So how do you know what your subsidy will be? Well, your subsidy is going to be based on your household size and your income for next year, because your 2023 insurance plan will be based on your 2023 income. So you will always be forecasting your income a year in advance. So if you're only living on your pension and maybe some Social Security, it'll be very easy to project that number. If, however, your income is going to be volatile, you need to think about that, because the subsidy through the federal government squares up at the end of the year. What I mean by that is if you overestimate your income, you projected that you were going to make too much, and then ultimately you make less. You'll get money back from the federal government at the end of the year. However, the opposite is also true. If you underestimate your income and you make more money, you will owe money back to the federal government. So if your income is going to be volatile, definitely lean towards the stipend, because you know you're not going to owe anything back. But if your income is going to be lower and you can get that extra money from the federal government by getting a subsidy, feel free to do that and bypass the stipend. Okay. Now, how do we get each of these dollar amounts? Again, your stipend is going to come from VIA benefits. You need to get that money as a reimbursement each and every month from VIA. But know that you don't have to buy your health insurance from VIA. You can work directly through the marketplace, you can work directly through the insurance company, or you can work directly through an insurance agent who can help you find and pick the right plan. Here's the best part. Whether you work through VIA, whether you work through one of the carriers directly, or whether you work through an agent, you will pay the same rate for the same plan. And so I've heard horror stories of people who have spent hours on hold. They get disconnected. They have to wait weeks for an appointment with VIA. You don't have to go that channel. Feel free to contact a local agent, someone you know, someone you trust, someone you think is really going to have your best interest in mind, and then just submit that bill to VIA at the end of the month to get your reimbursement for your stipend. Or if you're going to get the subsidy, you don't even have to deal with VIA at all, because at that point, you're not getting the reimbursement since you're not getting the stipend. So every single year you can change, which means every single year you should reevaluate and make sure that the money you're getting is the best. I don't want you leaving money on the table. So next, let's talk about when to enroll. So the opportunity to start enrolling happens November 1st. So we're only about 2 weeks away from your enrollment time. You have to be enrolled by December 15th if you want your plan to start January 1. And you need to make sure that you let VIA know if you're going to be taking their stipend by November 15th. So 3 very important dates there to think about. November 1 is when you can start picking plans. December 15th is when you have to have your plan selection in. And November 15th is when you need to let VIA know the plan selection, or if you are going to take advantage of their stipend for the upcoming year. Next, let's talk about specifics of what's happening in the industry. So for those of you who went through the OPERS system last year, congratulations, you made it through year 1. It's time to talk about changes. For those of you who are new retirees this year, this is going to be a different process for you. And I want you to be aware as to how that process is going to work. So first, the majority of plans out there are going to be HMOs, which means you will need to stay in your network of doctors and hospitals unless it is a medical emergency. Yes, there is one PPO option out there in the state of Ohio. However, that option is significantly more expensive. And since an HMO is already covering you out of network for medical emergencies, unless you're living in another state multiple months a year, most people are going to be perfectly fine with the HMOs. But what's happening to those plans this year? Well, unfortunately, we're seeing an industry average of about a 10% rate increase. Now, there's some places where it's even worse. If you are a medical mutual customer, you're probably going to have closer to a 16% rate increase. Unfortunately, there's not a lot you can do if you want to stay with medical mutual other than changing plans. But if you are in Central Ohio and you had a medical mutual plan because you wanted the Ohio health system, I have some good news. Anthem, Blue Cross Blue Shield, is expanding their network of doctors and hospitals. You see, last year, Medical Mutual was the only game in town that had the Ohio Health Network. For 2023, Anthem Blue Cross will also have the Ohio Health Network, in addition to the Mount Carmel Network and reciprocal networks up in Cleveland, Toledo, and Cincinnati. So I would suggest a lot of you look at Anthem as a competitive option, since their plan costs were already less and they're going to have a lower rate increase this year. I truly do feel that Anthem will be a significant player in the market this year. But what should you be looking for? Well, we're probably all familiar with copays. We're all familiar with deductibles, but I want to make sure we talk about a number called the maximum out-of-pocket. So your copay is what you pay when you go to your doctor, when you go and get a prescription filled. It's a very low fixed dollar amount that you pay for those services. Your deductible is an even larger number that you pay for bigger services. If you have to have a hospitalization, a surgery, a major test. But the maximum out of pocket is really the number that you should focus on the most, because the maximum out of pocket is exactly what it says. It is the maximum you will pay out of your pocket. Should something major happen, should you have heart attack, should you have cancer, this number is your worst case scenario. Now, you have the opportunity to enroll in gold, silver, or bronze level plans, but know that pretty much every tier level has the same max out of pocket. For 2023, the vast majority of plans will have a maximum out of pocket of $9,100, whether it's gold, whether it's silver, or whether it's bronze. Now, yes, there will be a few exceptions to that rule, but probably 9 out of 10 plans will have this $9,100 max out of pocket, whether it's gold, silver, or bronze. And so if the gold level plan has a max out of pocket of $9,100 and the bronze level plan has a max out of pocket of $9,100, are you really getting anything more by paying extra for that gold level plan? I am a big believer in keep as much money in your pocket as you can, and ultimately you're going to wind up ahead of the game in most situations. So what I want to wrap up with is just a reminder. You don't have to work through VIA. You only have to get your reimbursement through them. So if you want a local agent, someone who's going to give you this personal one-on-one attention, someone who wants to make sure you know the options, someone who wants to make sure that you understand how all the plans work, give us a call. We're right here in Columbus. We will gladly service Cleveland. We will gladly service Cincinnati or anywhere in the state, but we are right in your backyard. We know the plans. We know the options. We know the carriers. We're on a first name basis with the vast majority of the customer service departments in the insurance companies, and we will be there to help you every step of the way. So give us a call, 614-568-1324. Did I mention that there's never a fee for our services? So you're not paying anything to have me help you customize a plan. My extension is 1001. My customer service ladies, Mandy, 1002, and Noreen at 1003. You don't want to talk on the phone? Fine. Shoot us an email, mike.gatteri@healthmarkets.com, or simply go onto our website, healthmarketscolumbus.com. But remember those dates. Remember to review your stipends versus subsidies so you have the best possible situation. And if you have any questions or need any other clarity, please, please, please give us a call. I appreciate your time and attention. Everybody have a wonderful day. Happy open enrollment.